This is Professor Mark's weekly stock market jobber report.
All right. Well, hey, Ranger Walker. I'm glad you could be here. Or should I say, Sensei Walker? I've been looking forward to having you as our guest, probably more so than any of the other people we've had. So let's get into our weekly stock market jobber report, and we're going to look at various sectors. Well, actually, we're going to look at all the sectors that make up the S&P 500 and see what is going on with them. Now, one of the most important things to understand about financial markets is that certain price levels are more important than others. I mean, you could say that as just like a mantra over and over. So when the markets, or I'm going to just say stocks, but it applies to anything markets, ETFs, cryptos. When a stock gets to an important price level, it's kind of like it gets to a fork in the road. They tend to make a tradable move one way or the other. They tend not to hang out at these levels for too long. So these are called support and resistance levels. So at a support level, there's more demand than supply, or maybe an equal amount of demand and supply. But let's just go with there's more. So if a market is trending lower, it's because there isn't enough demand or buy orders to absorb all of the supply or sell orders. So sellers are forced to offer their shares at a discount, and this creates a downtrend. At a resistance level, there is more supply than demand. So if a market's trending higher, it's because there isn't enough supply to fill all of the demand or buy orders. But when we get to a resistance level, there is. So in an uptrend, there's not enough supply. Buyers are forced to pay a premium, and this forces an uptrend. Now, levels that were support and resistance can shift back and forth. Important levels can retain their importance for a while, but what was support can become resistance, and what was resistance can become support. And you can see that on a lot of charts, and we're going to see it today. So, levels that were support become resistance because of buyer's remorse. People buy at the support level, and then eventually, if the price goes lower, a lot of the people who bought regret buying. And they tell themselves, I made a mistake. I want to get out, but here's the thing I don't want to lose any money. So if it gets back to the price level that I bought at, I'm going to sell. So if you have enough remorseful buyers placing sell orders at the level that was support, the support level can convert into resistance. Levels that were resistance can become support because of seller's remorse. Investors who sold at resistance, a lot of them experience remorse if the price ends up going higher, and they tell themselves, I made a mistake. I want to buy my shares back, but I'm only going to do so if I can get them for the same price that I sold them at. So if you have enough remorseful sellers placing buy orders at the level that was resistance, that level can turn into from resistance into support. So the importance of these support and resistance levels can remain intact for months or maybe even years. This is called market memory. And we can see this on almost any chart. All right, now here's our S&P 500 ETF. This is where we like to start. This is the Spider ETF. It follows the S&P 500. And we can see here, we got a good example. Resistance here became support over here. Um, Support here became resistance here. Resistance here became support here. Remember, that's that going back and forth. People sold, I'm sorry, people bought here, the price goes lower. Actually, you know what? Yeah, this isn't a good example. Let's look for a better one. But we can see up here, resistance became support. Support here was kind of resistance there. But we'll see some more clear things. But anyway, this S&P 500 is made up of 11 different sectors. And by examining the sectors, we can kind of get an idea of what's going to go on in the broader market. So there's 11 sectors, and different things are in the driver's seat at different times. Sometimes it's most important to pay attention to the financials if you're trading SPY. Sometimes it's the most important to pay attention to the tech. It switches back and forth. So this is why at Stock Market Jobber, we go through these sectors because not only does it help us get an idea of what's going to happen with SPY, it also gives us an idea of what's going to happen, or I mean, it can give us an idea of trading ideas. For example, if we see a sector breaking out, we can look within the sector for the stocks that look like they're going to break out the most. Or if we see something breaking down, if we see a sector breaking down, we can look within the sector for something that looks like it's the weakest looking stock. And there's a trading idea for you. All right, so let's go look at the sectors. So here is the technology ETF. And we could see that this is a good example here, right? See how resistance became clear support, and now it's resistance again. So we'll have to see if we get through this or not this week. If we don't, there's a good chance we roll over and go lower. Resistance here became support here. All right, so Sensei Walker is going to come on for another minute here and tell us a little bit about his background.
Yo, he's about to kick my ass. Hi, I'm Chuck Norris, and you may know me from such things as Walker, Texas Ranger, or Professor Mark's bizarre obsession with the show. Did you know that my real name is Carlos Ray? And did you know that I was born in 1940? I hold a black belt in Tang Soo Do, Brazilian Jiu Jitsu, and Judo. I also won tons of martial arts championships and later founded my own discipline called Chu Chuck Do. I also noted writer. I wrote books on martial arts, exercise, philosophy, politics, Christianity, and Western fiction. I was twice a New York Times best-selling author. I joined the United States Air Force as an air policeman, an AP, in 1958 and served in South Korea. It was there that I got the nickname Chuck and began my karate training. I got discharged from the U.S. Air Force in August 1962 and applied to be a police officer. While waiting on the list, I decided to open a martial arts studio, and the rest is history. But being the star of Walker, Texas Ranger was way better than all this combined.
All right, that's cool. And once again, we're glad to have you here. So we can see this example here. We have support turned into resistance, and this is where XLV will probably stall out this week. These are ETFs that track these sectors. They're called spiders because they're Standard & Poor's depository receipts. We can see here that resistance remained resistance. This is market memory. So I don't know why the 127 level is important. I don't know why this level is important. I don't know why this level is important, but I don't need to know. Now, this is kind of an interesting thing here. You've probably heard the term gaps refill. Well, this is an example of it. When a market gaps lower, there are certain prices it doesn't trade at. Notice how the close was there, the next day the open was there. So you got these two areas that show up as a gap on a chart where there was no trading. So because there was no trading, there just can't be remorseful buyers who are trying to sell things. It never traded there. So if it never traded there, you can't have buyers. You can't have sellers either, but you can't have buyers. So in this case, when people start saying whatever this news was that drove the price down so much, and people start saying, all right, you know what, this news is not as bad as people first thought. So I'm going to get in there and I'm going to try to buy some shares. Well, there's not a lot of sellers around, so they're forced to pay a premium, and that puts the shares into an uptrend. So when a stock gaps through price levels, if it reverses and eventually gets back to those price levels coming the other way, there's a good chance it makes a rapid move through them. So support, resistance, here resistance became support. And we talked about this last week, I think, that if we get down to here, there's a good chance there's support because it was resistance. Now you're probably saying to yourself, well, how am I supposed to use this? Knowledge. I believe you because I could see it on the charts, Mark, but what am I supposed to do with it? Well, what you can do is if you're thinking about buying or selling something and it's trending up or down and you are confused about where to have your price to sell or buy, well, you can just look into the past. And if you see that it's getting to a level that was important, there's a good chance that there will be some kind of reversal there. For example, say you were watching healthcare, it's been going lower, and then all of a sudden the selling really starts to accelerate. And you say to yourself, there's a healthcare stock I want to buy. Doesn't necessarily need to be this. This is the sector. But say you're thinking about maybe buying Merck or Pfizer or J&J, anything that's in the sector. You could say, all right, well, you know what? If it gets down to around 127, if the XLV, the sector ETF, gets down around 127, that's where I'm going to probably buy because there's a good chance there's going to be support there. And sure enough, there was. So one of the things we teach at Stock Market Jobber is you have to let the market tell you what to do. If not, you're just guessing. And if you're guessing, that's a good way to lose money. So we let the market tell us what to do. Here we have our financial sector, and we could see we're pretty much exactly at resistance. 35.99 was Friday's close. So over the next few days, if we don't get through this, there's a good chance we move lower. Now, why would that happen? Well, sometimes when things get to resistance, they tend to make fast moves lower, like back here or here. It's because the investors who are trying to sell start to get the sense that there are other sellers emerging or other sellers coming into the market. That's why the price isn't going any higher. So someone might say, you know what, I want to sell at 36, but I think there's other sellers coming into the market and they might drive the price lower. So I better be proactive and go down to 35.90. Someone else might say, oh, he's going to 35.90, I'm going to go to 35.80. And it creates a snowball effect. The same thing happens at support. Investors start to sense that there are other buyers around and they're afraid that they're not going to be able to get stuff done, so they decide to raise their price and it starts a snowball effect to the upside. So we always need to let the market tell us what to do. Here we have a couple reversal patterns too, which I just wanted to point out. Patterns really aren't mysterious. They're really just illustrations of a trend change, right? When a trend changes quickly, it ends up looking like a V. It could be a V top or a V bottom. When a trend changes slowly from bulls to bears, it could be look like a rounded top. So here we have a quick change. Here we have a slow change. Sometimes we change the trend in one day, like we have here. If you were to look at this in the morning, you would have said, oh, this is going to be another down day. Remember, this is the opening price and this is the closing price here for the day before. In one day, the buyers turned the tide and took over. So that's a reversal day. So it's not important to remember what the names of the patterns are. What's important is to understand how they illustrate supply and demand dynamics. All right, Ranger Walker's going to come on here for another few minutes, or another few, whatever. Ranger, you can talk as long as you want. Just promise that you don't kick my ass, all right?
My friend and fellow martial artist Bruce Lee invited me to play one of the main villains in The Way of the Dragon in 1972. See, I was the world champion at the time, and he wanted to kill the world champion, not just beat him. While I continued acting, my own other friend and student Steve McQueen suggested I take it seriously. So I took starring role in the action film Breaker Breaker in 1977, which turned out a profit. My second lead in Good Guys Wear Black in '78 became a hit, and I soon became a popular action TV star. Kind of like StockMarketJobber.com is going to be just as popular as Chuck Norris and just as tough.
All right, that's pretty cool. Now this is like a textbook example of price levels, right? Resistance becomes support. Seller's remorse. People sell, the price goes higher. A lot of them say, I'm going to buy my shares back. If there's then enough remorseful sellers placing buy orders at the level that was resistance, it can convert into support. That's what happened here. That's what happened here, right? Look at that. Resistance here, support here. Now here we have the opposite. Support becomes resistance. Buyer's remorse. Investors bought here, assuming they still held onto it. And like I said, the markets have memory. Some of these levels can retain their importance for a long time, months, years. I've even seen decades. I mean, look at Bristol Myers Squibb. It peaked in, I think, 2015, maybe, in the exact same price that level that it peaked at in 1999. So, anyway, these levels can stay intact for probably longer than you think. But if we have enough remorseful buyers placing sell orders at the level that was support, it can turn into resistance, and that's what happened here. Here's our industrial sector. We can see support, resistance. It's probably too early. I mean, it's too soon to know if this is a breakout. It's only $1 above where we have this level here, and we're right at the top that we were at a few weeks ago. But we can see it's been range bound, 102.50 to 97. This is kind of interesting too, because if you think about it, like when I was in business school, a lot of what they taught us was like, oh, there's random walk and you can't outtime the market. If that was true, then we wouldn't have support and resistance levels. Everything would just be kind of nebulous, right? It's important to understand that the vast, vast, vast majority of moves in markets have nothing to do with fundamental reasons or what they're saying on Fox Business News or on CNBC. The media tries to attribute every little move to some kind of fundamental reason, and that's not the case. The majority of moves are just investor perception. Why did this particular sector gain 3.5% in just a few days? There's no reason. There's not like anyone came out with any new inventions or anything like that, at least that I know. It's just investor perceptions. Why were we at the same valuation here as we were here, as we were here, as we were back here? If you try to figure out the market with logic, you're going to fail, okay? Because it's not a chess game. In chess, the rules are always the same, all right? The bishop always moves the same way. The rook always moves the same way. A better analogy to me is poker, because poker you have rules and you have strategies, but when you're playing poker, there's someone on the other side of the table from you, and I presume they're a human. I don't know, unless you're up to some weird stuff there, but if and that person has emotions just like you do. So what works today may not work tomorrow. That's one of the reasons why all these artificial intelligence funds or funds that are driven by AI have really done so poorly, because they try to look at the market as though it's a mathematical puzzle. I don't think that they've understood how to factor in the randomness of how humans are irrational. All right. Chuck says he wants to come on again, and I'm not going to get in his way because, once again, I don't want to get my ass kicked.
Here's the thing. You can learn a lot from watching Walker, Texas Ranger, but the most important lesson is that bad guys always drive vans. I mean, always. I mean, you can see this in pretty much every episode. I did a lot when I was Walker, Texas Ranger. Took on a Jamaican drug gang, Satanists, neo-Nazis, Latino gangs, bikers, Indian shamans that practice black magic, the mafia, the Ku Klux Klan, voodoo masters, zombies, felons who broke out of jail and came looking for me, many, many more. And guess what? I kicked all of their asses with my spinning back kick and roundhouse kicks, took those bitches down. Also taught school in the ghetto. I was a nice car driver, took disadvantaged kids camping in the woods, ran a reform school for troubled youth, went skydiving and mountain biking, saved countless people while riding my horses. One of them, I don't even want to talk about it. It was gross. I was half Cherokee. Actually, I am half Cherokee, not was. Could communicate telepathically with the Dalai Lama. The other people say nah, but me and the Dalai, we down. And much, much more. But I'm not sure if I've ever actually arrested anyone. Can you believe it? Professor Mark does. I just use street justice and police brutality to get the job done. Maybe I don't want to do all the paperwork that comes with an arrest. Who knows?
All right. Thank you for that. Pretty interesting how one of the things I've learned, Ranger, from watching your show is that it seems like bad guys always have vans. So I don't know what that's all about. But I don't think I've ever seen one of your shows where like the bad guys didn't have some kind of a van. So I guess that makes your life easier. You just look for vans, right? Anyway, here we go again. Resistance became resistance. Support converts into resistance. Resistance converts into support. Okay? So just remember, if you want to be a successful trader, you need to know where these important price levels are. In my opinion, I don't think you can be successful if you don't understand these basic fundamentals of how financial markets work. That there are certain price levels that are more important than others. What's the trend? What's the momentum? And what's the psychology? It's not about having a holy grail that like works all the time and is perfect. That just doesn't happen. And it's not about looking at ridiculous things like Elliott wave and Fibonacci and Gann theory and harmonic charts. That stuff is science fiction. Read Ray Bradbury or watch Star Trek if you want science fiction. If you want to learn how to make money, pay attention to what levels are important, what are the trends, and what is the momentum. Because we have a principle: overbought stocks that get to resistance tend to sell off, and that's what happened here. I don't have the momentum indicator on here, but you could just tell that this is overbought. Oversold stocks that get to support tend to bounce. Basic market principles. I know people that have made careers off of knowing just those two simple principles. Here's yet another good example of how we have these important price levels. I mean, you don't need to be a market guru to see this, right? Resistance resistance here, support becomes resistance. Support becomes resistance. Buyer's remorse. People bought, market goes lower. A lot of them say I made a mistake. I'm going to get out at break even if it comes back to my level. And they place their sell orders at their buying price. If there's enough remorseful buyers placing sell orders, the level that was support turns into resistance. It happened there. It happened here. We can see there's resistance here. That's why it became support over here. Levels that were resistance can become support because of seller's remorse. All right. Walker Texas Ranger is going to come on again. And that's quite a career you had, dude. You've had a lot of jobs. You've even like tangled with the IRA and all kinds of street gangs and demonologists. You have probably the most awesomely bad show ever.
So first, besides my beautiful chest, you need to notice my perfect form. Solar plexus is covered, fists are vertical to the ground, kicking with my heel, and my left foot protects my groin. Professor Mark is so jealous, and he should be because my form is perfect. For years I roamed the earth, picking up martial arts themed awards and championships, pretty much whatever I deemed to raise my leg in a kicking motion. My best karate accomplishments were the 6 world professional middleweight karate championships that I won in 6 consecutive years before deciding to retire in 1974 as the reigning champion. That's right, boys couldn't beat Chuck. So, all of this means that it's probably fair to say that I am not only a true karate champion, but in many, many ways I am the karate champion. Chuck Norris out.
Now, here's our energy sector. And once again, I mean, I'm going to say this like I'm a broken record, but if you want to make money, this is what you need to understand. Why is 88 important? Why is 94 important? I don't know. Why is it not 92 or 91? Why is 83 important? I don't know. Why isn't 82 or 84? I don't know, but I don't need to know. I don't understand how electricity works, but I know if I flick the switch, the light comes on. I mean, sometimes we know. I guess I'm getting a little facetious there, but we know that this is support because this was resistance. We know that this is resistance because this is support. But why did this initially become resistance? I have no idea. Why did this initially become support? I have no idea. It's just this is where the sellers decided to come out of the sidelines or off the sidelines. This is where the buyers decided to come off the sidelines. So a good chance we run into resistance here around 88. So if I was trading this, I'd be watching 83 and 88. We're closed at 87.26 on Friday. Here we have our utility sector. A little on the boring side, but you can still make money in it. Once again, we look at these things and like just say hypothetically we were back here, and one of the signs of a bullish market is the seller's remorse, right? Think about it. Market's going high. People experience seller's remorse because they sell and it keeps moving higher. So a lot of times when a support level converts into resistance, it's kind of the base for a new trend higher. And that's what happened here. So right around here, when it became apparent that this level was support, we could have looked into the utility stocks and just see what stock looked the most compelling as a trading idea. Remember, this is just the aggregate of the sector. So just by definition, within this sector, there's going to be stocks that look more compelling and stocks that look less compelling. All right, Chuck's going to come on one more time here, or maybe. Well, we'll see. He can come on whenever he wants, because once again, I don't want to get my ass kicked.
I mean, just look at this. You don't want to be on the receiving end of this kick. Wow.
All right, thank you, Sensei Norris. This is our materials sector, and once again, going back 18 months now, talking about market memory. Support around 81, support around 81, support becomes resistance. We're up here. Now, I don't think it's going to happen. I think we're probably going to roll over. I'm kind of a little bit short-term bearish on the market, but if we look like we're going to break above this 84.75 level, well, guess what? If the price trades there, it tells us something. It tells us that the investors who created the resistance with their sell orders are out of the market. So whenever you take supply out of a market, it sets the stage for it to move higher because the demand side is going to have to pay higher prices. It doesn't matter if it's in the financial markets, if it's in the real estate market, if it's in cryptos, if it's in, you're buying, I don't know, hot peppers. I mean, any market where you pull out supply, well, the buyers are going to have to pay higher prices. Now, last but not least, we have our real estate sector, and we have resistance becomes support, becomes resistance, becomes support. Now, just say this was trending lower, and you were thinking like, you know what, I'd like to buy this ETF, but I don't, or a stock within the sector, but I just don't know where to get it, or where to do it, or where to put my order. Well, I'm going to buy it if it gets to say 37. All right. Well, that way you're just guessing. Okay. And when you guess, it's a good way to lose money or to miss out on things. If you looked at the market and let the market told you what to do, you would have said, oh, gee, this level was resistance and support and resistance. There's a good chance it's going to be support again. And it was. So once again, the good traders in the institutional world are focused on the simple financial market principles. Some price levels are more important than others. Markets are always trending. They're always going up, down, or sideways. Markets that are overbought tend to sell off. Markets that are oversold tend to rally. All right, all right. Mr. Norris looks like he's getting ready to sing here. So I'm once again not going to say anything. All right, the stage is yours, Mr. Norris, and once again, thank you for being with us this week.
Did you know that I can sing? It's true. I sang the theme song to Walker, Texas Ranger. Take a listen. And a one and a two. In the eyes of a ranger, the unsuspected stranger had better know the truth from right, from wrong from right. 'Cause the eyes of a ranger are upon you, and any wrong you do, he's gonna see. When you're in Texas, look behind you, 'cause that's where the ranger's gonna be.
All right, it's kind of catchy, right? So anyway, here's me. Blah blah blah. Yay me. I traded directly for Mary Gabelli, for Steve Cohen. So these are two of the greats. So I was pretty honored. I was head of trading at three different money managers where I oversaw the trading of numerous strategies. Hedge funds. I was a market maker. Mutual funds. I traded. So anyway, that's it, everybody. Oh, also I like to play golf. Well, actually, I don't like it recently because I haven't been playing well, but I rescue dogs and guinea pigs, and I like teaching people how to make money. All right, everyone. Thank you for tuning in. I'm the Stock Market Jobber, and I will see you soon.